Today's Animal Spirits is brought to you by Masterworks. Michael, you and I don't know a lot about the art world, besides the art that we've purchased, but Masterworks has done a ton of research on this, and they actually have, if you go to their website, you can click on the price database. You can search any artist. So if there's an artist that comes along and you want to invest in it, you can kind of look at their history. So let's just pull up Pablo Picasso, which...
Overrated.
What percentage of the population do you think assumes Picasso was alive in like the 15th century and didn't die in like 1973?
He was actually in The Godfather 2. He was in The Godfather 2. Did you know that? He had a cameo.
Oh, really? I didn't know that.
You could have
talked when I was younger. You could have talked me into...
I thought it was like a Leonardo type era, right?
It seems like it. His name...
A BC guy. Well, not quite BC, but
so if you want to just pull up Picasso on their price database, you can look at the different metrics and like the turnover by year, the average. So in 2021, Picasso had nearly $300 million worth of paintings turnover in terms of auction sales.
Wait, whoa. How many millions?
293 million and change in 2021 alone. All-time record for a Picasso painting. What do you guess?
46 million?
179 million.
Huh.
So you can look at all
outside.
these.
Do you know I own a Pablo Picasso? Not to brag. You know which one I own?
That's right. I own the same one as you, right?
The Homiasis.
Yeah, your favorite one to say. So you can look at all the different paintings from Picasso that have sold, what the purchase price was, how much appreciation it had. Some of these have like 20 times appreciation over 20-year periods. It's pretty crazy. Anyway, so if you want to learn more, actually understand the art world before you buy something, you actually look at Masterworks database.
Well, my Picasso is not for sale. I'm diamond handing that thing.
Okay, way to go. Go to masterworks.com to learn more, and then masterworks.com/disclaimer for more. Welcome to Animal Spirits with Michael and Ben. Michael, I feel like the last few weeks we've been a little bearish, glasses half empty, things are horrible in the world. Let's do glasses half full. Last few weeks. Yeah, last few months for sure.
Last few quarters. Who are we kidding?
Looking for a bright side here. This is a little research I did on my own this past weekend. S&P 500 as of Friday was down 25%. So that's the 9th time since 1950 the S&P has been down 25% or worse in a bear market.
You know, when I was looking at this table this morning, that 25% number stuck up on me. Like I knew that we were down more than 20, but I didn't realize that we hit the 25% mark.
Yeah, from all-time highs. So I looked at, okay, what happens since 1950 when the S&P is down 25%? Now, in all of these instances, the stock market fell further, right? But I just said, what if you bought when the S&P is down 25%? And I didn't do exactly because whatever, it's easier to I did the first month after it's down 25% because...
Can I just do a little jump in right here? Just a little jump?
Well, as you were wont to do, that's your thing, so...
Well, I just want to point out that in each one of these previous episodes, stocks didn't fall 25% for no reason. Each one of these had a very good reason for falling 25%. You had 2020, the GFC, the dot-com bubble, 1987, the recession of 82, 74, 70. So these were all really bad times.
Yes.
But no matter, had you bought stocks, Ben, what happened?
So I did the 1, 3, 5 year, 10-year returns from here. And just so we know, these returns are not from the bottom. So I put this out on Twitter and a bunch of people came back to me with requests. Why didn't you do this? Why didn't you do this? That's what happens usually. This thing went a little viral because I think people are grasping for good news. And what I did is I said, because I use total returns, that's where I have my data. I just did total returns from the month after the S&P falls 25%. So in most of these cases, the S&P fell way more than 25%. So there was more downside, but even so, the average 1-year returns were over 20%, average 3-year returns are almost 40%, average 5-year returns are over 80%, and average 10-year returns are over 200%. There was only one down period over 12 months. Everything else is green. And this is with further downside. So everyone kind of came back to me and said, yeah, but inflation and the Fed and valuations, and I understand all this.
Why didn't we think about that? Yeah, of course. Yeah, no, because in 2009, things were very good. Things were very good. There's no reasons to sell in 2009.
To your point, every time we have a bad market, guess what? There's reasons for it. And those reasons
stocks don't just fall 25%, but just cause.
They're glaringly, and I did the same thing. So the Russell 2000 and the NASDAQ are both down 30% as of Friday. That was both over 30. So I did the same thing. And you get one really bad period for the NASDAQ in 2000 because that coincided with the dot-com and then the great financial crisis. So you had that's the really bad outlier. Everything else for the Russell 2000 and NASDAQ looks pretty good. Same thing. Again, it's easy to be bearish right now and look for the bad stuff, but I think if you let your brain get stuck in that doom loop, then guess what? Historically, buying stocks when they're down 25, 30, 40% leads to good outcomes in the future.
How about this? Short term, scared, maybe bearish, fine. You got to be long term greedy here.
I'm getting to the place where it's like long term. The further this goes down, the more long term bullish I'm getting.
Yeah,
Definitely.
I think I said that last week. Not to brag. All right, here's another data point corroborating what we're talking about here. I had Nick Majuli look at all of the times where there was a complete washout in the S&P 500. And I used a fairly arbitrary number, but here it is. When less than 15% of the S&P 500 is below its 200-day moving average, I asked Nick to take a look at what happened.
So for people who, like me, who aren't technical analysts, that just means there are very few stocks in an uptrend at all.
Yeah.
Right? The majority of stocks are in a downtrend.
So again, less than 15% of stocks are above their 200-day moving average. There were 219 times that this happened, going back to I think 1980 something. And a lot of these are overlapping. Okay, so fine. So we had 1987. When else did this happen? 1988, 2001, 2002, 2008, 09, 11, 18, 19. It's rare, and 2020. And the only time that it was lower a year later was 2001. It was 12%. The S&P 500 was 12% down 1 year later, and October 2008 it fell another 6%. But the point remains: when stocks fall a lot, you have to buy. Can stocks fall another 15%? Yeah, why not? But do you really think that stocks won't be higher 1 or 3 years later? If you don't believe that, what are you even doing owning stocks in the first place?
I'm sympathetic to the people who say, well, I'm a trend follower. Instead of buying early, I'm going to buy late. And I think that's, if you have rules to guide your, that's fine too. But the thing is, yes, you can't be scared now. The time to be scared was, but you should, if you were going to panic, you should have panicked before.
It's easy. You have to assume that the worst is behind us. Is it possible that the Fed makes a big policy mistake? Is it possible that things spiral? Of course it is. Anything's possible. Oil went negative. Anything can happen. But you have to believe that once stocks are down 25%, if you're not buying, I don't know what you're doing.
Right. And then if they go down 30 or 35, then you buy some more. That's the game. Right? If
caveat, I'm not talking about like individual stocks, because all bets are off with those things.
Yeah,
but
this
is
a
basket of stocks,
the market as a whole.
Whether it's index or stock picking or whatever the heck, buy a basket of stocks.
All right. So last week at I think it was the Seeking Alpha conference, Stanley Druckenmiller, he said,
oh wait, we have to timestamp this. We forgot to do that earlier. It is Tuesday morning, October 4th, 9:13 a.m. Eastern Standard. Not to brag.
The market hasn't even opened yet. So on this show, we're probably going to hear the stupid bell ring on your computer, because it always does. Right? What is that?
I don't have it open. Don't have it open right now.
You turn it off? Okay. Every time we're talking, I hear the bell go off in the background. Michael has the bell for the market open and the market close.
Thinkorswim. It's Thinkorswim.
Computer. Okay. So at Seeking Alpha last week, Druckenmiller said the Dow won't be much higher 10 years from now. And I think he said something along the lines of, I'm just saying we've had a hurricane behind us for 30 or 40 years and it's reversing. And I wouldn't be surprised. In fact, it's my central forecast that the Dow won't be much higher 10 years than it is today. So I looked at this and it's easy to say, well, 2020 and 2021 were probably some of the easiest markets in history. Like that 15-month period might have been one of the easiest times to make money in financial assets ever. Then you had this 12-year bull market since 2009 that was just amazing.
Here's the thing about Stanley Druckenmiller that you need to know. He has said repeatedly that he has a bearish bias. He has made all his money in bear markets. Well, I don't know if that's necessarily true, but I believe he has said something of the sort. So it is in his disposition to be pessimistic. He was pessimistic for the entire last decade when stocks ran whatever hundreds of percent that they ran. And he's one of the best investors of all time, traders of all time, whatever you want to call him. He can change his mind like literally in 3 weeks. So it's sort of frustrating.
If you invested strictly on his calls, he's been wrong more than almost anyone in the last decade. But
His
he's
public,
probably still made money.
His public calls have been an abomination, but I bet you he's done just fine, right? Because he's not telling you when he changes his mind, and he's the best, one of the best risk managers of all time. So there's no way that he would say give a 10-year forecast and then like go to sleep and see what happens.
So obviously we always risk anything can happen in the markets. We can't predict them. You could see a lost decade like that has happened in the past. It probably will happen in the future, but I'm going to make the case. Look at the numbers I just put in here.
Okay.
Everyone says the last 40 years have been so easy. Look at the return since 2000. Stocks are up 6% per year. That's the S&P. Bonds are up 4% per year. Cash is like 1.4. And inflation has been low. And then look at that's over a 23-year period, call it, through 9/30. Look at the previous 20-year period when stocks did 16%, bonds did 8%, cash did 7%. I think a lot of that was just the 80s and 90s, and people think it's been easy because we had a 10-year bull market. We've had two 50% crashes in the stock market at the beginning of this century. We've just had 2 bear markets in 3 years. That has not happened since the Great Depression. We've never had, since the Great Depression, there's not been 2 bear markets of 20% or more, or 25% or more now, that have occurred in less than 3 years. This has been a really challenging century for investors, even though we had that bull market, because we had the lost decade already. So it's not, maybe people might maybe say I'm cherry picking because I'm going from 2000, which was a bad entry point here, but the last 2+ decades in the financial markets have not been easy for investors. We've had a really difficult time. Mm-hmm. And it may have been really easy for people in the 20+ years before then, but things have already been pretty bad this century. We've had a lot to deal with as investors.
It's hardly been a walk in the park. I got bad news. Bad news for me, not anybody else. My eyes are going bad.
What does that mean?
I have to, on Google Chrome when you have to like zoom in, I have to zoom this doc 150% because I can't read these numbers.
Do you need glasses?
I do actually. I went to get my eyes checked because I need to renew my license a couple of weeks ago, and I was doing this. You know what I mean? I was like squinting and making weird faces, and I don't feel so bad. I made it 37 years without glasses.
Most of the people I think 3 out of 5 people in my family have glasses, and
you wear contacts now?
No, I have better than 20/20 vision. Not to brag, I've never been to an eye doctor in my life because my vision is like immaculate. Huh. I have like superhero vision.
I know I shouldn't have been drinking coffee this whole time.
That's it.
So JP Morgan is out with their Q4 guide to the markets, and they show the return needed to reach the January 2022 peak. If we got there, this is kind of depressing. If we got to the January 2022 peak over the next 4 years, that would be a 9.4% compounded annual return from here, which is pretty good. If we did it in 3 years, it would be 12%. If it took 5 years, it would be 8% compounded, which again, not so bad.
Okay.
But if it takes 5 years to get back to those highs, it would feel terrible.
Yes. FanDuel puts an over-under on one of these to get back to all-time highs. I'm definitely going under too. Over-under number of years it takes to get back to all-time highs. I would take 2. I would say under 2.
I got to see the odds. No?
Oh, okay. Well, the odds are the returns.
What do you mean?
The closer you say to it happening, the better your return is going to be.
Oh, do you take the inverse of? Do you take the inverse?
Well,
I'm doing the Galifianakis gif over here.
Yeah, I think if you went over, then your odds would be much worse because your return would be worse.
All right, so you're gonna timestamp this right here, right now.
I say under 2 years.
Prior to October 2024,
we're back at all-time highs. I'm pretty confident in that.
Confident in that assertion?
Very confident in my assertion. Right. Someone who's not. Cliff Asness. He put this piece in the FT recently, and it was prospective returns on a 60-40 portfolio, and he shows that for the U.S. and global 60-40, we're at near all-time lows. And he goes back to 1900. And these are real returns, expected real returns. So I just want to go through a little exercise to show why this expected return thing is so difficult to do. We've talked about GMO in the past. I went and saw Cliff Asness in a conference in like 2010 for institutional investors, endowments, and foundations. It was this closed door thing. And I think if you look at this chart, it's pretty close. I think he said the expected return on an annual return, real return on a 60-40 portfolio was in like the worst 98th percentile in history. And he was saying, we're expecting 2.5% from here.
When did he say that?
like 2010-ish, probably 2009, 2010. I don't want to besmirch the name of Chris Asness because he's one of my investing heroes. Like the way that he does research and the way that he thinks through probabilities, the way he communicates, and I'm a huge Cliff Asness fan. But from 2010 to 2019, a US 60/40 portfolio did more than 8% real. It was like 8.3% real. He was saying it's like one of the worst 98th percentiles ever. He's basically saying we're right about back there now. And I think the reason that expected returns are so hard is because predicting inflation is hard, A. Predicting the stock market is almost impossible, B. The bond piece is easy. That's you take the returns. But I think predicting inflation in the stock market is basically impossible. So I think these, I don't really believe these. And if anything, I think prospective return for 60/40 portfolio right now is better than it's been in years just because the bond piece is now at like 4%.
I think one of the appeals of macro investing is if you get the macro right, then you have a much better chance of knowing where to allocate money, especially when there's like a turning point, right? If you knew from 2013 to 2019, central banks would be easing, there would be very little economic volatility, right? You would probably say, okay, go long stocks and, no need for bonds, obviously.
The thing is though, like right now,
but if you knew that there was going to be a pandemic and inflation, and so another thing that you can't predict the macroeconomy in the future.
Right.
Like who knows?
Right. Or a pandemic, how that's going to completely change everything from 2019 on. So, but this feels like the first time, at least in the short to intermediate term, that I'm feeling, again, I don't like to think of myself as bullish or bearish. I'm long-term bullish on stocks, but I'd feel pretty good about bonds here at 4%
Feel very good about bonds here. And we're not the only ones. Money's coming into bonds.
So here's the thing though. What's a better scenario for diversified investors? People have a balanced portfolio. Rates stay in the 3 to 5% range, or rates immediately go back to 1 to 2%.
That would not be good. If rates go back to 1 to 2%, yeah, you would get a boost on your bonds, but things would have to be very bad for that to happen. No?
But it kind of feels like that's what the Fed is setting us up for. If they push us into a recession, that rates are just going to immediately go back to 1 to 2%, and you're going to get some price appreciation on your bonds, and then you're going to be screwed with no yield again. I'm saying like just holding rates here for a while would be way better for investors than seeing them go back because we have a recession. And I think I'm worried that's what's going to happen.
So Goldman's making the call, a weaker economy will drive households to continue selling stocks, causing a shift in investor mindset from TINA, which is there is no alternative, to TARA. There are reasonable alternatives. We expect households to sell $100 billion in equities in 2023. Would that move the needle? I mean, $100 billion sounds like a lot of money.
I can't get with the TARA thing here because Tara Reid was kind of a crazy person, and she's not a reasonable person. So I think we need to come up with a new acronym here. Is that okay? Is that fair? No? Okay. So they're saying they're going to sell equities to buy bonds. My only problem with this
By the way, have you rewatched American Pie?
I just did like 3 weeks ago.
How does it hold up?
I was laughing a lot. Okay. That movie, that one has a nostalgia premium for me because that came out when I was in high school. And
huge.
It's based, the guys who wrote it are from East Grand Rapids. And the school is based in East Grand Rapids. My mom actually went to high school there. And so it had the Grand Rapids element too, that it's based on a high school in Grand Rapids where these guys went. So yeah,
interesting.
That does hold up pretty. Yeah.
Yeah. Was that the first like high school movie? Teen high school movie? Obviously teen.
Well, it was the first new post 80s.
Well, no, of our generation. All right. So I don't know if I'm going to take the other side of this. I just would also mention that I don't think investor flows ever stop. Meaning money, like the automatic money coming into 401ks and people that have like, the automatic brokerage deposits. So Balchunas tweeted, ETFs used by buy and hold investors have seen steady inflows as usual, even in September as Bing Long advisors still unfazed.
I
just think that the money into VOO, SPOI, IVV, et cetera, that's one way.
So they're talking about selling stocks to buy bonds. I would think more investors would probably be selling bonds to put money into cash right now because cash actually has a yield now. So I would actually as we've talked about in the past, people are seeing losses in bonds for the first time. I have a hard time seeing people lean into that pain, even though they should because yields are higher.
I think that makes sense. In previous years, maybe 70-30 was the new 60-40, right? With the 10-year below 2%. I think that made a lot of sense.
Right.
But now maybe 60-40 is a new 60-40. You could
Well, yes.
you actually have fixed income in your fixed income portion.
I wrote a piece last week for advisors. We talked about it on Portfolio Rescue, or for retirees. Retirees said, great, if you're a young person, you keep buying. That's easy advice. Might not be simple, but it's easy. What do we do as a retiree if I'm sitting on a 60-40 portfolio that's down 20%? And I think with rates at 4%, you could, like you said, if you've leaned 70-30 in the past few years, you go back to 60-40 or 50-50.
You could downshift. You could downshift.
You could.
Well, this is a good example of be careful what you wish for, right? We've spoken to a lot of investors over the last few years who were understandably not thrilled with what they were able to get in bonds. And now you're getting a lot, but there was some pain along the way. So Katie Greenfield tweeted LQD, which is investment grade corporate bonds, posted its biggest one-day inflow since March 2020.
I think the average yield to maturity on that fund is approaching 5 to 6% corporate bonds, which I think at the lows it was like 2, maybe a little less than 2.
Remember
so again,
Microsoft borrowed money at like, I don't know, 20 basis points over the treasury. It was like, flows into short-term treasury funds are spiking, which again makes a lot of sense.
This makes sense.
What is the 1 year yielding? Is it
4%?
4%? What's a 6 month? Like 3 and change?
Yeah, well, I mean, it changes so much these days, but they're all around 4% for a while there.
Ben, are you worried about Credit Suisse?
You know, I got quick story I got to tell about Credit Suisse. When I was in college, and you know, when you're in college and you don't really know what you want to do with your life, and you just send out a bunch of resumes and cover letters.
Oh, believe
to places.
Believe me, I know. I didn't even send out resumes while I was in college. That's how lost I was.
Yeah. Well, we all know your cover letter story about the Orlando Magic and Cleveland Cavaliers.
Yeah. I said, wait, you have to get a job after college? I don't know how this works.
I had a friend who, basically, it was a friend of a friend who said, here, apply to this job in investment banking at Credit Suisse. And so my friend says, I want to read you my cover letter to make sure that, like, it sounds right. I want to read it out loud to make sure. So he called it Credit Susie. And I said, all right, just throw it in the trash. You're not getting that job. You can't even pronounce the name. So every time I see it, I think of Credit Susie. But so I sent this to you. So it sounds like the CEO sent out a memo. It was basically like, we need to raise money, but now it's not a good time. I sent you this the other day. It was Credit Suisse versus AIG and Citigroup. And these stocks are all since 2007 highs, down like anywhere from 92 to 96%. There was a good one in the FT about it. I don't know. It sounds like this is the kind of thing where a bunch of guys on Reddit who read like 57 pages of The Big Short assume this is our layman moment. And you kind of said, isn't this just a crappy bank? Because my thinking is the banking system is so much safer now because we had a layman moment. And
right,
the fact that we had that is
in place,
yeah. So we're probably not going to have it again. That's my general stance right now.
Yeah. So yeah, I mean, I looked at a chart of EUFN, which are European financials, compared with Credit Suisse. And I went back, I don't know, this is over the last 10 years. EUFN, again, the European financials are in a 32% drawdown, which is not too dissimilar from US banks.
Right.
Credit Suisse over the same time is down 85%. Right. So maybe Credit Suisse is just a really shitty bank. Maybe that's it. And it's not a Lehman moment.
Right. It's people want to like throw out the derivative stuff and
it would be poetic. It would be poetic. So it looks like futures are way higher this morning. We had a very nice bounce yesterday. I'm not calling a bottom. Nobody knows. Blah 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 blah. However, it would be poetic if it was like the Credit Suisse bottom.
Credit Suisse bounce. Yep, we'll take that.
Yeah. Ben, I notice you've got bros on bros today.
Yes. So
pull down your
right.
zip.
Well, see, so I got the
oh, that's new too.
This is new too. So here's how you graduate from Tropical Bros. So you start out with a Hawaiian shirt because that's for parties, vacations, dinner in the summer.
Just for a good time. If you look at the smile.
But then if you want to maybe shift it to a little more casual, then you go the polo. So this is a polo one from them. And now these new ones, this is new to me and new to you, I think, the quarter zip, which is fantastic. The color's great.
You could wear that you could basically wear that to the wedding if you wanted to.
Yeah, so I got the polo on quarter zip here. So
we were thrilled to learn that the Animal Spirits family took advantage of that Animal Spirits promo. Ben, what was it? Animal 20?
Animal 20 it's still alive today if you want to get 20% off. We had a bunch of people send us pictures and receipts, and people, they rushed to the website, we know. So
You know
check
what
it
I
out
did
again.
not get, and this is my bad. I'll get it soon. You know what I did not get was I don't have shorts or
Okay.
trunks.
They have good swimsuits there too. I have a 2 or 3 pair of their swimsuits as well. And you can get the swimsuits to match the Hawaiian shirt, so you can go full beach bod, right? Like
Well,
that's a full.
I don't, not me.
Okay, well, beach attire, so you can
By the
go
way,
matching.
this made me laugh when we did the Rocky video and I fell off of you and somebody said I looked like a beach whale.
That was nice. Nice. Hey, we said we're gonna do the before and after for you because it's a new.
Listen,
when we were-
I bulk in the summer and I cut in the winter. I'm trying to
when
cut.
when we were in the pool, you said you're gonna go on the Phil Perlman health program, and they're gonna do before and after. So we have the before.
Yeah. Well, although I got to get that picture done because I'm already slimming down. I don't know if you can notice.
Okay, looks good. Well, it's that Tropical Brothers shirt. So remember, it's tropicalbros.com. Use Animal20 to get 20% off your entire order. It's a screaming deal.
All right. So one of the things that we didn't mention as we spoke about the stock market, and I think this is making it especially difficult, is people are fairly confident, myself included, that the economy is slowing and probably will even go into a recession, right?
Yes, this
Problem
is the most telegraphed recession of all time.
Yeah, and
Everyone's
so
been
like
calling it for months.
yeah, so the question or the thing that's scaring people is, all right, the S&P fell 25%, the Nasdaq fell 32-ish. Like, is that enough? And how deep will the recession go? So Jim Bianco tweeted the September Chicago PMI was 45.7, badly missing the consensus, even below the lowest of 24 estimates on Bloomberg. Only one time has this measure been this low, and it was not a recession, which was December 2015. The other 7 times it was this low, it was a recession.
So the other thing that people are worried about is, okay, we're going to recession. That means earnings have to roll over. I've done this in the past. I don't have it in front of me, but I'm going to update the numbers. There's been a ton of times historically where earnings have gone negative year over year, and the stock market has done just fine. I'm going to pull this up.
15-16, we had an earnings recession.
Yeah, so I would, just because earnings fall doesn't necessarily mean the stock market has to fall too. Maybe the stock market is falling because it knows earnings are going to fall. So I'm going to have the data for you next week. But just a
and
little
here's
teaser.
just to twist your head one more time. I think it's reasonable to think, all right, pessimism is too much. It's too much. I don't care how bad things are going to get. Right here, right now, things got too pessimistic, and I expect a bounce that will roll over. Maybe that's thinking too far ahead. We'll see. But anyway, the other thing that people are worried about is the fact that the Fed just won't back off. So you saw the Bank of England step in to, I guess the worry was that pension funds were getting margin calls, and that's obviously no bueno. But the Fed is not backing off just yet. So the Fed's master, I think she is Kansas City. I can't remember exactly. She said recession won't stop Fed from raising rates, which is a bold strategy, Cotton.
That is the Ron Burgundy.
What is it?
I don't believe you.
Yeah, I don't believe you
Sorry.
either.
If we go into recession, they're going to stop raising rates. They're tough talk. I'm sorry. There's like Jerome Powell will be out of a job. If he throws us into recession and keeps raising rates, he's gone.
The UN
Right?
called for the Fed to stop raising rates, which is
Right, so
not
this-
something you see every day.
This is kind
Jenny-
of famous last words. This was
Yeah.
this was the day
Yeah.
before, I think, the blow up. And why do they call them gilts again for British bonds?
I don't know.
All right. So U.S. Treasury Secretary Yellen, I don't see any erratic financial market conditions. And that's what is it from where the guy from Princess Bride where he kind of blinks his eyes and goes, which one's
That's
that?
Princess
The gift?
Bride?
That's the Princess Bride guy, isn't it? Wesley?
No, that's not Carrie Ellis.
It's not? I thought that was him. Okay. Speaking of, my kids were all sick last week, and my
What
daughter
a
was
great
looking.
movie.
My daughter was. Is that? I was telling my daughter, Princess Bride might be the best sick movie of all time, just because they start the movie off with Fred Savage in his bed and his grandpa's reading to him while he's sick. Is that the best? If you're a little kid and you're sick, is that not the best movie ever to watch when you're sick?
Oh, it's so good.
It really
Yeah,
is.
it's up.
Okay,
Yeah, it's way up there.
but Yellen saying that, I know it's not 2008, but that had flashbacks of Bernanke saying subprime woes won't seriously hurt the economy in like May 2007. So Colin Roche had a good one. he's one of my favorite
By the
Fed
way,
watchers.
speaking of Princess Bride, not to get too far off tangent, but listen, this run from Rob Reiner, Stand By Me, When Harry Met Sally, The Princess Bride, Misery, and A Few Good Men.
That's pretty good. Yeah, that's a good run. So
Oh, I don't. He definitely didn't direct all of those, but he was maybe produced a few of them. Anyway,
so Colin
Janet
Roche
Yellen.
says Colin Roche says he thinks of interest rates as a sledgehammer. You can tap a
But
wall
wait,
with a sledgehammer, or you can
What
smash it.
did you quote Yellen?
Yeah, I did. Saying
Okay.
she said, "I don't see any erratic financial market conditions."
What is she
And-
looking at the economy with blindfolds on? I don't understand. Does she not see interest rates?
I don't know. So he's saying you can tap a wall with a sledgehammer, or you can like smash it. And he's saying the Fed raising rates so fast is them smashing a wall instead of just tapping it with a sledgehammer. And that's where people. And it sounds like Paul Krugman and Greg Mankiw. He's like that's like the economist on the left and the economist on the right. I think this Greg Mankiw guy. I don't know if I'm saying his name right. He wrote every economics book I read in college, and he's saying I, as a conservative economist, and agreeing with Paul Krugman as a progressive economist, and the Fed has gone too far. And I think once Larry Summers pivots, it's all over. Then the Fed's going to have to back off. That's my call. When Larry Summers says it's time for the Fed to back off, that's when it's going to happen. How's that?
When does that happen? I need to know.
I don't know. Pretty soon. So the Bank of England stuff, how much of this do you understand?
Well, I read a few articles, so I'm up to speed on what the articles are saying. Can I explain it cogently? Let me just quote this guy, Simon Bentley, who is head of UK client portfolio management at Columbia Threadneedle. He said this is the most extreme market event that I have been involved in. So I'm going to link to a New York Times piece. Alison Schrager wrote a piece. What it sounds like is pension funds did something called liability-driven investment, where they were matching what they had to pay these pension collectors. Who are people that collect pensions? They had to match the payments with like maturities. And so they were levering up. And so the good thing about rising interest rates is it makes the present value of future cash flow smaller. So that's a good thing. It makes it makes them more
pensions,
funded.
that should be a good thing, but not if you're leveraged up like that.
But if you're levered and rates rise too quickly, then everything blows up and you get margin calls. And maybe that's like a bad way of explaining it, but that's sort of the TLDR.
But they showed the 30-year US or UK government bond went to 5% one day and then
down
back
to 4%?
down to like 3.8 the next day because they stepped in, which is just a crazy move. And that's the thing. These government bonds should not be moving this quickly. And especially if you're someone who is a pension fund investor or retiree, every liability of the government is someone else's asset. And these assets should not be trading this violently. And that's, I think, what the Fed misunderstands is we're doing this so fast that we're taking this stable, what should be a stable asset, and making it unstable. And that's going to break stuff. And
I think
I feel like
the UK,
I don't see how they don't get this.
I think I read in the UK that maybe a third, I can't remember how big, but a lot of their mortgages are adjustable. And so rising rates makes it especially more painful.
Yeah, we get that from a lot of people in Canada and the UK that write in about U.S. mortgages saying, why don't you guys just move them? Because they're adjustable. I think they reset every 5 to 7 years or something, which that would be just brutal. Just seeing that train coming down the tracks, knowing that's going to happen.
Yeah, talking about anxiety. I don't know how you sleep with that. So I think the Bank of England said they're going to buy, I can't remember, $2 billion worth of mortgage bonds for the next 15 weeks or something like that. So
I guess maybe the Fed will say our mandate is U.S. employment and U.S. price stability. But when they're causing instability everywhere else, that has to be a problem for us eventually.
So the market did rally that day. The U.S. stock market rallied pretty aggressively and then failed badly to close out the week. That was fun. I saw gas below $3. How about that?
In New York?
In New York.
It's back above $4 here.
I think it went back above, but I did see it dip its toe below $3.
Okay. Not bad. See, this is the thing about like the political thing about inflation. I'm sure that a lot of it is like the Fed politically knew that inflation is a bad thing, but if commodity prices are down and gas prices are down and wages are up, I mean, doesn't that take a little bit of the heat off of them from an inflation perspective? Even if the inflation rate continues to stay high, I feel like if nothing else in gas prices fall, that takes it doesn't make it a hot button issue for people as much anymore. because
Gas
of the way
is
our
a big
brains
one.
work.
Gas
It
is a
really
big one.
is.
Because it affects everyone. Even though mortgage rates are up and people rent and that resets, like, what is the number? 2/3 of Americans own a home.
Yeah, the home ownership rate is 65% in the U.S.
Okay, and so all of those people are unimpacted by rising interest rates for the most part.
Yeah, unfortunately, it's just, I mean, and that's the thing that stinks about people who have been waiting for the housing market to crash or to slow. Housing prices are rolling over, but rates are so much higher that it doesn't matter. Housing prices would have to fall 50% for it to matter. And that, I'm sorry, but that's not happening.
For what to matter?
For your mortgage payment to be cheaper, because rates are so much higher that it's completely taking it off the table for making housing cheaper, more affordable.
So Michael McDonough showed a chart how much home you can buy, assuming 20% down payment for a 30-year mortgage rate with it, and you want to keep your monthly mortgage at $2,500 a month. At the bottom of the interest rate cycle, that was $760,000 or so. Now it's down to $476,000. Again, that's a house you could afford with 20% down and a $2,500 monthly mortgage payment. I know not everybody can stretch, but I think that you're right. The house that was $758 is not going to $476.
Right. Here's the other thing. Sam Rowe tweeted this from Oxford Economics. With 30-year mortgage rates approaching 7%, we estimate that 18 million fewer households now qualify for a mortgage to buy a median price existing home compared to the end of 2021. So that
18
means
million fewer.
18 million fewer, meaning 18 million households cannot afford this. Like, the bank won't give them a loan because the payment is going to be so much higher relative to their income. Housing prices have
Right.
risen, mortgage rates have risen, incomes have not
qualifying for a
risen nearly enough.
Qualifying for a mortgage over the last few years was relatively easy,
Right.
right? To at least get like the initial yes, you could afford a home,
Yes. Even if the
right?
paperwork
because
is kind of a pain in the butt.
when you go to a house, they say, are you pre-qualified,
Exactly.
right? What's a pain in the butt?
The paperwork side of it that we've talked about in the past. But I
Yeah,
mean, can
awful.
you imagine? Trying to get what you're pre-qualified for, and how much that changes based on rates over the last few months. You could have gone to the bank at the beginning of the year and got pre-qualified and been looking for a house all year, and you probably have to start that whole process over again.
100%. Yeah, it's
Oh,
rough.
Speaking of, so the Vengeance movie I watched last week, a few people said they watched it too. They have a great initial scene at the beginning with John Mayer and BJ Novak. And I think it's a millennial thing or a Gen Z thing, but instead of saying right or I agree or yes, they say 100% to everything. So you got me on that one. So everything they agree with each other on, they go 100%. Yeah, 100%. And it made me realize that is a thing people say now. 100%.
Why are you bringing that up?
Because you just said 100%. See, you didn't realize it.
100%. Yeah, it's rough. Didn't even realize. All right, let's do some quarter stuff. By the way, I saw the new transcript search for the Quarter app, QUARTR, for those who are new listeners. Fantastic. What is that? Oh, that's a hat.
A quarter hat.
The new quarter search, the new transcript search is chef's kiss. All right, so Ben, riddle me this, please, if you will. So I listened to Nike. I read the transcript. Nike today, this is from September 29th. Nike today reported fiscal 2023 financial results for its first quarter ended August 31st, 2022. I'll read that one more time. Nike today reported fiscal 2023 financial results for its first quarter ended August 31st, 2022. Can we just get away with fiscal years? What is this nonsense?
Yeah. I worked for a company before that had a November 30th fiscal year, and it screwed up everything.
How is it its first quarter ends in August for 2023? I feel like I'm taking crazy pills.
It must have been like a tax thing back in the day where it made more sense tax-wise to do it at the beginning, and they just always did it like that.
Can't we just do like a one-time adjustment? Everybody get on the same schedule? All right, be that as it may. The stock got killed. This was an inventory thing, I guess the backlog and then the over-ordering. This quarter, it became clear to us that conditions in North America are shifting once again. Earlier ordering by retailers, driven by strong consumer demand and less predictable delivery times, has led to elevated inventory levels broadly across consumer goods. Then transit times began to rapidly improve with signals that further improvement may be coming. And at the same time, consumers are facing greater economic uncertainty and promotional activity across the marketplace is accelerating, especially in apparel. As a result, we face a new degree of complexity. So their inventory in North America grew 65%, and the stock got killed.
What's a Nike market cap these days? And it's still got to be
130?
I was going to say 100.
Survey says.
137. You were pretty close.
What did I say?
You said 130. You were pretty close. It was 137. Here's the thing. I'm sticking with my call that Black Friday deals are going to be massive this year because of all this inventory build.
That's a good call.
I still think you keep holding on these deals.
You're
gonna be able to get shoes and apparel and all this stuff for
what
very
did you just
cheap
buy?
Black Friday.
What did you just buy for your wall?
Oh yeah, I gotta send out. We had friends who bought one of those Samsung frame TVs. It looks like a picture frame. It's a TV, but it looks like a picture frame. You can have. We should do a Masterworks pairing there where they can show our Masterworks paintings on our TV. So it actually looks like a picture frame.
You should have your homie asses right on the screen for you.
Exactly. So I can't remember who sent this to me, but a few years ago, we were talking about Samsung dryers for some reason. And someone said, "Hey, I work for Samsung. Here's a discount code."
No, me. It was the line on my TV.
Oh, it was you. Oh, that's right, for the line on your TV. Did you get rid of that? You still have it. You showed me, right? When I was at your house.
I moved it upstairs because I have like a big bedroom, so I thought that because my bed is so far away from my TV that I wouldn't be able to see the line. Oh no, I still see the line.
Well, it wasn't as bad as I thought, but someone from Samsung actually replied to us and said, "Hey, here's a friends and family discount." And so I go to look, and I got like $700 off of this TV for the friends and family discount. I can't remember who sent that to us, but thank you for that. And my wife appreciates it because she wanted one of these frame TVs.
Yeah, very nice. You showed me. Very nice.
You don't ever hang those TVs yourself, do you? Because you got like these 8-inch TVs.
Nuts? No, I can't do that.
Okay. Who do you pay? Best Buy? Or what's your place? You have like New York has all their own stores. It's like Randy's or something. Or you guys have all your own stores.
Geek Squad will do it for you if you buy a TV from them.
Okay.
I know a few people that could do it. All right. Revenues for Converse were $643 million, up 2%. But whatever. $643 million. That's a lot of Chuck Taylors, no?
I kind of forgot Nike even owns Converse.
Wait, for the quarter? That's a lot of money.
I still own a pair of Chucks. Those shoes will never go out of style.
I own two. I don't wear them very often, but they're great sneakers. But $643 million, they're not expensive.
Well, that's not all they sell, obviously, but that's probably the majority of it. That's a shoe that never goes out of style.
What else do they sell? What else does Converse sneakers?
I don't know. Clothes?
Wait, Converse doesn't have clothes, do they?
You don't think so?
I don't know. That's a good question. All right, either way, the stock is now flat since 2018. Stock picking is such a bitch. This is one of the best companies in the world. Best brands. Who doesn't love Nike? Huge Nike guy. Stock is flat.
But it's also the problem is though, so you have this price change chart in here. It was up well over 100% from 2018 as recently as 12 months ago, and now it's flat.
So this goes back to my point that macro is everything.
Yeah.
Especially at turning points.
Why did you put a picture of a guy wearing a hoodie in here?
I'll tell you exactly why. Because when I was listening to the call, they spoke about innovation and something called Nike Forward. So I looked at this and it's like sustainable, like crazy material that I don't know. It looks very scientific. So I'm like, oh, this is cool. I'm gonna buy one of these.
they got you totally. It looks very scientific.
Oh no.
They totally talked you into this.
Well, I looked at the video and it's like, it's got all sorts of waves and shapes and a men's hoodie, $160. No way.
No way.
Come on.
Okay.
I draw the line somewhere, and that's way over the line. All right.
I do. They're the only Nike are the only running shoes that I'll wear though. Their running shoes are the best. They're very lightweight. They feel like you're wearing socks on your feet. It's great.
So I don't run. Never have, never will. But On Clouds are phenomenal. Robin bought me a pair, and I saw Josh wearing them, and I don't like to be like a Johnny come lately to these type of things. I never wore Allbirds, for the record. I missed that one, so I never wore Allbirds. So Robin got me a pair. And I said, thank you, but I only wear Nikes. And I put them on and I said, ooh, these are comfortable. So I got another pair.
I kind of
Allbirds are
Allbirds
phenomenal.
Allbird.
On Clouds are phenomenal.
Okay, Allbirds had the crown for a while, but On Clouds? Those are the New Balance for dads. If you're a dad,
Do you
wear
have a
those
pair?
instead of
Do you
New
have a
Balance.
pair?
No, I don't have any. No, sorry.
And they have a pair of like nice On Clouds, like casual.
Okay.
Big
Yeah,
proponent. Okay.
Those are for dads who don't want to wear the white New Balance shoes with
That's true.
shorts.
Ben, you know that I've now played basketball twice, no injuries.
You didn't blow out your Achilles yet?
I played last night. Not even that sore.
Okay, that's pretty good. Like, what are we talking? Like games of 11, ones and twos?
7.
Shirts and skins?
Games to 7. No shirts and skins.
Okay.
All right. Let's talk about CarMax. So by the way, I know we can't talk about this every episode, but the pandemic really changed everything. There was a before the pandemic and after.
Right.
Right?
You really have to I think you do have to keep coming back to that and how it changed almost everything.
Yeah,
Yes.
maybe we spoke about it so much that we don't now we don't speak about it enough, but it really did change the world dramatically. All right. So as an example of how the pandemic changed the world, look at the revenue of CarMax, which this was a nice, steady Eddie sort of growing company, but the growth that it had post-pandemic was ridiculous. And now, like many other businesses, they are now on the other side of all that pull forward. So they said in our retail business, total unit sales in the second quarter declined 6.4%, and used unit comps were down 8.3%, which is great. Finally, we're getting some relief on cars. It sounds like prices are coming down. They said we began the second quarter with a low single-digit decline in comp sales during June that reflected a continuation of softer, although improving sales, which we discussed on our last earnings call. COPSEN fell sharply at the beginning of July. There we go.
Personal finance tip from Ben. If you have a used car, do not sell it to CarMax. I think the way that they...
Did you ever do it?
No, I tried. The way that they sell their cars at low prices is they probably buy them for very low prices. So like I checked the Kelley Blue Book just to make sure, and they offered me like $2,500 less than it was worth. And the dealership gave me Kelley Blue Book basically.
Okay. So Carl Quintanilla tweeted, General Motors ends Q3 with 359,000 vehicles in dealer inventory, nearly 3 times the inventory available at the end of Q3. The dramatic jump reflects supply chain production normalization. As supply chains normalize, so too will inflation. And Sam Rowe showed a chart of prices of new vehicles and used vehicles prior to the pandemic, and obviously prices went, parabolic. And so it sounds like if maybe bang on back your Black Friday deals, maybe we're not quite there with cars. But so I was talking with the guy last night on the way back from basketball. Every reasonable car is up 40%, like from where people's leases are ending.
Which is ridiculous. So eventually,
Totally ridiculous.
when all the semiconductors are finally back in these cars, and there's new cars that come out, and there's a flood of them, the used car prices are going to crash. They have to, right? You'd assume.
Lastly, Tesla had a pretty ugly day yesterday. I'm not
why
quite
was that?
sure.
So every stock was green, but Tesla, basically, all the big stocks. Why was that?
I'm not quite sure what the story was there. I mean, they did miss estimates, even though there was a record. It was a record quarter, but they missed estimates. So, yeah, I screen grabbed the heat chart from yesterday, and green across the screen, and Tesla sticks out like a sore thumb. It was the worst.
So you only see the heat maps when it's a really, really good day or a really, really bad day. You don't see it if it's just kind of an okay day. It's when you know the extremes in the market when you see the heat map.
They said, as our production volumes continue to grow, it is becoming increasingly challenging to secure vehicle transportation capacity and at a reasonable cost during these peak logistics weeks. Is that enough to knock the stock 10%? I don't know. I don't know what it was.
Do you think that if you drive a Tesla electric vehicle, you should be getting a good parking spot? Because I've been seeing a lot of places who have the EV charging stations in a really good location, and it's taking up a good parking spot. I'm just saying. You know what else? If we're talking parking lots here, I've got a few nits to pick here. So I drop my daughter off at soccer 2 or 3 times a week or whatever, and these parking lots for soccer field were not made for like 40-foot long Suburbans and trucks. The people who drive the big Suburbans, that's fine if you want to drive a big car. That's your thing. But you got to park like 3 miles away. You can't park in a regular parking spot because you don't fit. What do you think about that? No Suburbans or trucks in the parking lots at the soccer games because you can't get around them, and then they take up like 2 spots and you can't fit. They need their own parking lot for trucks and Suburbans because they're too big now.
I can't wait till you get a
Thoughts?
I can't wait till you get a Suburban.
It's not going to happen.
I went to Roosevelt Field Mall this weekend. Why did I go there? Oh, I was with Kobe and we had like, I needed to get something and needed some time to kill because it was a rainy day. But the Tesla, the plugins are literally at the end, all the way at the end, at least where I was parked, at the
worst
very end
spot.
of the lot.
Okay, interesting.
Yeah, the worst
Okay,
spot.
I've seen
So
it.
you know what? You and your electric vehicles, back of the line.
All right. Did you see this thing about Elon Musk's rich friends? The tech, because they're
I didn't read any of this. Fill me in.
okay. A lot of people were dunking on the rich people, basically saying, haha, rich people are just like us. So they showed all these rich people text messages with Elon Musk when he was trying to buy Twitter. And their due diligence was basically Elon Musk saying, do you want in? And they'd say yes. So Larry Ellison said yes right away. Mark Andreessen said yes right away. And people are saying like they were saying like no additional work required. Whatever you want, Elon, we're in. And everyone was kind of dunking on these people saying, see, these big, huge billionaires, they're just like us. They don't do any due diligence on their investments, blah, blah, blah. I understand that. I also seem to think like there probably have to be people in your life. They're like everyone had a friend in their life who they would just do whatever they said. Hey, this friend says we're going to this party, we're going. This friend wants to do this tonight. Like there's always one friend who everyone kind of follows. And I think it's just kind of nice to know that really rich people, like billionaires, are still like that. They're just regular people. They have peer pressure and social angst just like the rest of us. But I want to know, sight unseen, if there's a person in your life who says, I'm investing in this, I want you to invest with me, who are you saying yes to 100% of the time? Besides me.
Well,
So, because it sounds like this is what it is to these people. It's like Elon Musk is in. I don't care what it is. I'm in. Who's that person for you?
Duncan.
It doesn't have to be a person you know. If it's like just a really well-known investor, this person is investing. I'm following them in, sight unseen.
When you
I don't
say
care what it is.
well,
Meaning
that
I'm
person,
not doing any due diligence. They're just going to tell me I'm investing in this. Are you in or are you out?
I don't know that person exists.
I don't know. I couldn't think of anyone either. I don't know.
When you
if
say
there is-
sight unseen, like you won't even know what you're investing in, or
No,
they'll tell.
like
Okay.
like I'm investing in. I'm going to take over this company. How much can I count on you for? And you got to answer now.
Okay. Listen,
That's
I
a
don't know.
tough one, right?
I don't know a lot of successful people. I guess is where I'm going. I don't know.
That was a backhanded compliment of the day. No, backhanded. Yeah. Anyway.
That's a good question though. So Josh just sent this to us from Morgan Stanley. So they just put out a note: autos and shared mobility. To our clients who refuse to pay above sticker for a new car, your patience is about to pay off. A stalling U.S. seasonally. What's SAR?
I don't know, but I appreciate the fact that you tried to say it.
Is that seasonally something? It's something adjusted rate. Auto?
I don't know.
You know what? I'm gonna go to Google. What does SAAR stand for? SAR
Anyway.
Indian Bistro. That's definitely not right. Oh, seasonally adjusted annual rate. Okay,
You had it.
close. A stalling SAR and a 17-month high in new day supply may finally bring deflation to new prices. Make room in your garage for a cheaper new car, but will you make room in your portfolio for car stocks?
So if you want to buy your significant other a Lexus with a huge bow on it for Christmas, maybe prices will come down in time.
Are you going to make it at December to remember, Ben?
Pretty good.
DocuSign's cutting by 9%.
How bad is
9% seems
DocuSign
notable.
down? Because that seems to
It's
me
down bad.
like one that people still have to be using. So it must have just been people just
Down
bid it
80.
up too high.
It's down 80.
Jeez. Because that seems to be like I understand the Peloton thing. So what you had the chart last week that said what Peloton's down 96%, Stitch Fix, all these other you had all this handful of stocks down 80 to 90%. I guess DocuSign must have just got completely overvalued, but that seems like one to me that it should. I still DocuSign stuff all the time. Like business wise, it should be still working correctly, right?
Yeah, I guess it was just like a lot of other things. It was just a valuation thing. How big was the valuation? It was way too much. It was 55
Yeah.
billion.
True. For click and sign, yeah.
So, we had another day last week where everything was green and there was a big one that was red. It was Apple. And if this was any other day, this would have been, I actually think this was the Bank of England day. So there was so much news that this sort of went under the radar. But Apple was down like 6 or 7% at one point, finished off the lows. But Bank of America downgraded Apple, which doesn't happen too often. They said that they viewed the key risks of a weaker iPhone 14 cycle as consumer spending is elevated globally, weaker near-term services, and whatever. But Apple caught a body.
So they were saying that the demand for the iPhone is not. I got the new 14 one like 2 or 3 weeks ago.
How is it? They're all great, right?
Yeah, it's fine. It's fine. It's like it's a little faster. It's like 10% better than the 11 that I traded in for.
By the way, I love. It's fine. When in reality, this is like the best piece of magic that the world has ever seen.
Yeah, yes. I use it 12 hours a day. It's okay.
Yeah, it's okay. All right, Ben. Last week I spoke about the app Game Changer, or how parents communicate, and I was wondering how people did it back in the day. I got an answer. Ask and you shall receive. Some guy Jack tweeted to me. Either you called a local number where the organizers would update a recorded message for cancellations. Due to rain, all practice at Miller Field are canceled. Okay. Or there's a call sheet. A calls B and C, B calls D, E, and F, C calls G, H, I, etc. And then somebody wrote, yes, phone trees. Coach calls 3 people. Each of those 3 call 3 more. Blah, 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 blah. Everyone knows within 10 to 15. I mean, sounds pretty bad.
Yeah, that doesn't sound great. All right, so some variety. Amazon's Prime's Video, Lord of the Rings, took number 1 position on Nielsen's streaming rankings with 1.3 billion minutes viewed, meaning this thing is like a juggernaut. And this surprises me because I have not heard one person say, like, this show is awesome, you have to watch it. I guess Lord of the Rings just has a lot of cachet still. I didn't even realize there were streaming rankings. Did you know this?
Of course. That is a huge number. Also with Amazon. So Dolphins Bengals, 11.7 million people watched. And it said before the season. So now Thursday Night Football is only on Amazon Prime. Before the season, some sports media observers thought Amazon would struggle to capture 7 to 8 million viewers. The e-commerce giant has drawn more than 11 million viewers for each game through 3 weeks. I wonder if this is driving signups. I bet you it is.
No, they said initially, like, they drove a huge amount of signups. I can't remember the number for the first week of that. So doesn't it seem painfully obvious in the future that it's going to be Netflix, Amazon, and Apple that are going to just own TV?
Yeah. TV.
They're going to buy all the sport. They're going to buy the sports rights eventually, and it's everything. If everything's going to streaming, it's going to be Apple, Amazon, and Netflix. So that's my call.
So a few weeks ago, we spoke with Mike Lombardi about which coach gets fired first. Which streamer gets thrown in the trash can first? It's either Peacock or Paramount Plus. Peacock, I'd say sure. Peacock.
Yeah. Recommendations. I'm still going through all my Jack Nicholson ones. I think I've caught up to most of the 70s ones. So I started with One Flew Over the Cuckoo's Nest. I watched Chinatown, and this past week I watched The Shining, which is great because all these movies are on HBO Max. They have a great catalog. The Shining was great. I think The Shining and Chinatown are both really great films. Like, they were really well done. The Shining was well done. Like, the horror thriller kind of movie is just not my style, I guess. I don't love those kind of movies. No, it's not my genre. But I mean, obviously, he was amazing in it, and it was very good. But I think my favorite was One Flew Over the Cuckoo's Nest out of all those. I'd watch that again for sure. The other two I probably wouldn't rewatch.
Can I make a recommendation?
Sure.
You should see Dr. Sleep.
Which one's that?
It's the sequel that was made 3 years ago with Ewan McGregor as Danny.
When he's older or something?
Yeah,
the kid was very creepy. The kid was very creepy.
It was good.
Apple has a new movie called The Greatest Beer Run Ever. You hear about this one?
No.
The trailer, it came out last Friday. It's Zac Efron and cameos by Bill Murray and Russell Crowe. And it's a true story about a guy who all of his buddies from the neighborhood went to Vietnam when he was young. And I think he just was in like the Merchant Marines or something, and so he didn't go over there. But he said his friends were down in their luck because they were over there, or people were dying from his neighborhood. And this guy actually decided to go to Vietnam as a civilian and go across the country and give beers to his friends to cheer them up. And it's a true story. So it's definitely a better story than it is a movie. Like, Zac Efron's Boston accent leaves a lot to be desired, but
Yeah.
it's a really cool true story. The fact that this guy actually did it, so not bad. Decent
Very
movie, better,
interesting.
but really cool story.
I got a lot of feedback. A lot of feedback on The Raid.
Good feedback.
Great feedback. Said if you like The Raid, see The Raid 2. So I haven't done it just yet, but
I can't believe how many Michael movie stands there are that love like these really crappy
The Raid-
horror movies that you like.
No. The Raid is not horror and it's not crappy. It's legit. I think
Okay.
I don't know if it won at Toronto Film Festival, but it's got an 87 from both the critics and the audience on Rotten Tomatoes. This is definitely not a crappy movie.
Oh, so I potentially might like this.
It's straight up violent kung fu. That's all it is.
Okay.
It's kung fu with kung fu. It's kung fu with a lot of blood.
Okay.
Um.
I mean, I like Kill Bill.
Oh, what a movie.
I was on again this
Okay.
weekend.
So my friend texted me on Thursday. You want to see Avatar tonight? And I'm like, ooh, it's out. So we're on our way to the theater, and I'm like, dude, I am so excited. I haven't read a single review. I don't want this to be tainted for me.
I thought
and
the
he
same
goes-
thing when I saw the commercial.
He goes, you haven't read a review for the 2009 movie? I'm like, what are you talking about? He goes, wait, do you think we're seeing the sequel? He goes, that's just a re-release for the movie that's coming out in December. And I felt like such an idiot because, like, obviously when Avatar comes out, they're going to spend $100 million on advertising and it's going to be impossible to ignore.
I saw a commercial for it and I was like, wait, it's out already? I thought it was coming out on Christmas.
Yeah. So
They
it just
tricked
didn't
me
click.
too.
So we're on our way. He goes, well, do you still want to see it? I'm like, well, not really. I want to see Smile. So Smile was not playing. So we saw Don't Worry, Darling, which was not a terrible time. It wasn't a bad movie. It wasn't good. It wasn't a good movie. Here's my take.
Wait, what movie
Chris-
is that?
It was
is that the Chris Pine
Yeah.
one?
yeah. So
Okay.
Chris Pine is a poor man's Leonardo DiCaprio.
I could see that.
If Leo played that role, it would have been much better. Florence Pugh was absolutely incredible. She carried the movie. She was so good. She's
Wait,
from
what was this movie?
Midsommar.
What is it about even? I don't even know what it's about.
So Harry Styles, who should have been played by Joseph Gordon-Levitt, he was terrible. Harry Styles and Florence Pugh are in the 1950s, and they're like the perfect couple, just perfectly in love. No kids, just all about themselves. And every morning in the town, the husbands go to work, and the wives have no idea what they do, but they're doing something that's gonna, change the world. And Chris Pine is like the creepy sort of leader, cult leader, I guess. And things start to go a little bit south, and things start to get a little bit weird. But the ending was very predictable, which is fine. I don't mind, I don't need to have like a massive twist, but this was building and building and building, and the end just sort of felt really flat for me. It was like a 6.1. It was like fine.
Okay.
Would not recommend, but not the worst movie I've ever seen. Okay, so then I ran it back because I really did want to see Smile, as you know. I'm a fan of horror movies. And I saw it on Friday night at 7:30. And there was a ton of teenagers in the theater. The average age was probably 16 and a half, and me. And they were, because it's a scary movie, they were very noisy, and they had to have like chaperones like come in and like shush them for the entire movie. Shush. One more time, you're out. Shush. Anyway, that movie was incredible. It was the scariest movie I've seen in the theater since It. It was
I feel like you say that for every horror movie you see, though. You said it about Barbarians.
Barbarian was a great movie. I didn't say Barbarian was a scary movie. I said it was a great movie. Smile legitimately was terrifying. Like it was terrifying. Not like gory, just frightening. Excellent. Cannot recommend it highly enough. This has been a year of horror. A lot of good stuff.
I guess so. I've never heard of any of these movies, and you see them every weekend.
You've never seen the preview for Smile?
No.
Have
I
you
watch
seen?
commercials.
Fair. Have you seen the lady at the baseball game that was smiling like really creepily?
Oh, okay. That was it. Okay, I did see that.
Yeah,
Okay.
it was so good.
All right. Good. Okay. Remember, you want one of these quarter zips or a polo, Hawaiian shirt?
I gotta say, you know what I like about
Snowsuits.
this among many things? It's like the in between. Like you're not gonna wear this in the winter, but right now when it's like 54 and you're
Perfect for the
transitioning,
fall. Yes.
yeah, And now, unfortunately, it's going to be cold real soon. That window is too short for my liking.
Yeah. Animal 20, if you want to get 20% off. I don't know how long it's going to last, but probably not too long. Send us an email, animalspiritspod@gmail.com, and we'll see you next time.